particularly your earnings here. It seems like revenue certainly outperformed here, given the fact that you've been spending so heavily in launching this new phone, Razer Pay, as well as a virtual currency, but really starting to hit on your net losses as well. That is actually rising. How should we take away from the first half?
Well, we've had some really strong growth, I think, year on year. I think over and above, what's more important is that gross profit has been rising quite a bit, about 45.9%. Our gross profit margins have been rising also at the same time. Now, in terms of the loss profile, it's actually been improving year on year, so we're quite happy about it. Now, in particular, I think something that we've been able to achieve in the first half of 2018 was to prove out our services model. Now, this was something that we talked about, I think, the last time when we went public, about proving out this high margin, high growth business model. So it's managed to hit $27 million in the first 12 months. Now, over and above at a really high GPM of 63%. Now, that's something that I think the analysts and myself are really happy about.
What do you think, particular among services, is driving that right now? I mean, we've seen that you've launched a phone last year. Before this, you really had no experience when it came to building a smartphone. But how well has that expansion actually played out for you?
Well, it's done very well. It's driven quite a bit of the revenues that we've got. And over and above, the entire mobile gaming market has just exploded. You know, there's stuff like Fortnite Mobile, there's PUBG Mobile. There's suddenly this whole attention on mobile gaming, mobile esports, and we're right in the forefront of it, right? So this whole notion of the gaming phone only came about when we launched the Razer phone. So I think it's an area that we're really focused on. We're growing together with the rest of the market, and we want to continue investing in it.
Min Liang, no doubt you've been watching the developments happening out of Beijing with China freezing those gaming licenses. What concerns do you have? How is that impacting you?
Well, you know, for ourselves, really two things. The first of which is in China, you know, there's a huge amount of growth. We're the #1 gaming lifestyle brand in China, and there's still so much TAM for us to kind of take advantage of. So we're seeing a lot of growth for ourselves in China. Now, what has been really interesting for us is that we actually have our services business, which helps game companies monetize in emerging markets. We probably have the largest monetization platform for media companies who want to reach places like Southeast Asia. So what we've seen in very recent times is a lot of the Chinese game companies have reached out to us. We've been helping them monetize in Southeast Asia through our platform. And for example, PUBG Mobile, we'll be helping them launch in Southeast Asia pretty soon. And it's pretty exciting for us to be working with multiple Chinese game companies reach into the One Belt, One Road, Southeast Asia region.
Right, right. I'm sorry, I'm not sure if I missed it or not, but I just did want to go back to your concerns about China's freezing on gaming licenses there. We sort of went into Southeast Asia, but what are your concerns there specifically?
Well, we don't really, from Razer's perspective, we don't have any specific concerns, given that the Chinese market is still a huge market, and many of the games over there are doing very, very well. I think engagement with the gamers is still very, very high. And I think it's a matter of time, I think, for the entertainment sector to continue growing over there in China. In fact, the entire global market is still growing, given that we're global. And I mentioned Southeast Asia in particular because I think the many Chinese media companies are looking for options to monetize also and grow outside of China. And Southeast Asia is a natural platform for them, given the One Belt, One Road strategy. And given our platform, we're able to help these Chinese media companies.
Min Liang, you mentioned Fortnite, PUBG. These are very critical to the growth in the industry. And now that China has halted the approval of these new games or the likes of Tencent to monetize on them in China, I mean, it should worry you, right? Because, you know, do you see this as more just like regulatory changes that we're seeing in China right now? Or is this actually a structural issue where China will continue to crack down on the industry?
Well, I can't really comment on specifically, you know, what the authorities think at this point of time. But I think from Razer's perspective, because we are a really global company, a third of our business is in the US, a third in Europe, and a third in Asia. We're seeing growth across the region, I think, over and above. So we're pretty insulated, I think, from that perspective. So we still see a lot of growth. We've had really robust growth in the first half of the year, and we actually see even stronger growth for ourselves in the second half. So we see this continued growth in the market, and we're pretty excited about it.
Can you give us a rough timeline then on when you'll be profitable, if not break even?
Well, our core business is very profitable. So if you look at our gross profits, we've actually grown quite dramatically, I think, over and above. Now, for ourselves, we could be profitable tomorrow if we stopped investing in some of these exciting new areas. So we are taking a very measured approach in terms of investments for R&D. So, our services business is very profitable. Our peripherals business is very profitable. Our systems business is actually turning a profit pretty soon. The only area that we're really investing in right now is the mobile area, which we do see a lot of future growth, and that's why you see the growth of our top line over and above. So, for ourselves, it's we've got a longer-term perspective in terms of growing our business. It's a measured approach in terms of doing so.
Your stock has been down more than 50% since you started listing earlier this year. What do you say to those who say Razer's just still can't quite live up to that valuation and the business model can't turn a profit?
So I think, essentially most of the tech stocks have come down quite a bit from listing. We've been fortunate enough not to be as affected as badly as some of the others. But ourselves, our numbers are robust. I think you can see a lot of growth. I think you can see that over and above. We've been growing very well. We're in tandem, in fact, better than the industry. The entire gaming industry is probably still one of the most exciting, fast-growing industries out there. So I think from a fundamentals perspective, we still do very, very well. And we want to continue just growing alongside the market and continue investing in the future.
Min Liang, looking to tie-ups specifically with Singtel here. Earlier this year, Bloomberg News reported that Razer and Singtel were getting together in the payment space. What's the latest on that?
Well, in short, we actually control one of the largest e-payment networks throughout the emerging market Southeast Asia. A lot of this born from helping game companies monetize. So I think from this perspective, when we worked with Singtel, they are the largest carrier in Southeast Asia. They've got 680 million users. We on our end, we have about 15 million users. So we're tapping on Singtel's 680 million users, converting them to our customers, and conversely, working together with them to create the largest e-payment network throughout the region. So with the largest carrier, working with us and with our network, we are really working to bring the entire region to a cashless region.